Hi friends, so let's start today's analysis. I think a pretty mixed kind of a day today, with I think broader indexes actually getting a lot of pain, and I think some of the pain also transferred to the main indexes, which is Nifty, Bank, and Nifty. So we'll analyze why it happened, what are the reasons attributed to it, what is the further downfall levels we can look at for, what are the resistances, etc., etc. Before that, we just slide to dwell into the global markets and see what is happening. So Friday again, it was a very dodgy session for the US, very volatile. We saw a lot of ups and downs, and ultimately US markets closed in green. Whether it is your Dow Jones or S&P or Nasdaq, all three indexes closed in green. But Dow at one point of time it opened positive, again went up or at least 400 points down. Then again we saw a recovery. It again went to 350 points, but ultimately closed around 220 points odd above the index, and that was how it closed. So it was a pretty choppy session, and you can see that if you see the chart of last 5 days of US, it has been the same story for almost all the 5 days, and the range is not small. The range of US markets is around 700 points per day. Means if you minus from the day's high to day's low, you are seeing that kind of big choppiness, big range in which the markets are trading. In that respect, I think our markets were actually trading in a thin range, whether it was Nifty or Bank Nifty. Nifty was around 200 points range, Bank Nifty was around, let's say, around 500 points range, 500, 550 points range. But the US markets are very, very choppy and they're moving up and down. The inference is pretty the same that at higher levels, they're feeling pressure. There are a lot of sellers now in US. And at the bottom level, yes, there are some buyers as well because people still think that Trump activities can actually, gain a lot in terms of their corporate earnings, and we can still see a up in the US markets. There are buyers, there are sellers, but there's a lot of tussle going on between the buyers and sellers in the US markets. Mr. Powell, Jerome Powell, Fed chairman, also gave a statement that they are not in a hurry to increase or decrease interest rates. They want to keep the rates stable. This was pretty much what he has been speaking for last 2, 3 meetings or speeches wherever he's coming on stage. I think Fed meeting is due on 19th March, and it's now 88% probability that nothing will happen. There'll be a status quo. When the markets were down around 400 points or so, but he gave a statement that the economy of US is still looking strong. So that is the reason why you saw the pull off, or let's say a recovery in the US markets, and we actually closed in green. Because the other indicators are not showing that. We have discussed a lot of indicators which are showing now that US is slowing down. The unemployment rate is slightly going up. The labor market is also slightly cooling down. Their confidence level have come down. The consumer spending has come down. So it is giving early indicators that US economy is slowing down. And remember, we did one statement which came from US in which the study is done on the GDP numbers, which was showing that January, February, March, this quarter GDP number will be actually negative. But Jerome Powell actually told that the economy is still strong, and that's the reason why you saw that pullback and the economy closed in green. But seeing the overall scenario of how the US markets are working, how exactly Trump policies are panning out, it is still of the view that the US markets have topped out for a near term or even for a medium term, and you will not see a big rally in terms of US markets now. It's not only we who are seeing from the charts and interfering that or influencing or taking out influence from that. The bigger brokerages of US markets are also telling the same story that the best of the US markets is over for a time being, and they are now actually negative on US markets, and a lot of money is now being pulled out from US. So on Friday also the dollar index went a deep nosedive, and it is now trading dollar index now today is trading around 1.103.7 kind of levels. So just a week before, 2 week before, we were at 107.8 kind of levels, and from there we have cooled off to 103.6 kind of level, which means that uh much a great amount of money has pulled off from the US markets, and it is flowing now in different areas. Which area we'll come to know, or let's explore what is happening. But eventually the US market is slowing down, and we are seeing that a lot of money is being pulled off from the US markets. Now, even if the if even if we think the economy is strong, but the kind of Trump policies which are coming up, and which the kind of inflation, sticky inflation, and let's say the lower GDP growth numbers, we will not see those you know bond yields also go up from here very very fast or very high. Trump wants dollar to be weaker. He wants dollar index to also remain weaker, which means that probably bond yield will also stay in this kind of a range for some amount of time. It's looking like that, which means that people will not be interested too much in putting money in bonds. You are anyways not getting returns from the US market as of now. It's looking like topped out. So, and a news has come, or let's say a figure has come now, that major of the brokers now on short on dollar now. So people are short on dollar now, and this is showing you that the money is being definitely pulled out from US markets. Now, uh, so there are a lot of statements which were coming in the weekend also. Mr. Trump is saying that now there's again a trade war which has started, or let's say tariff war started between China and Canada now. So China has put a lot of reciprocal tariffs to Canada because Canada started putting some tariffs to China in order to appease his trading partner, which is US. China has also put a lot of tariffs, and they have put a lot of sanctions, and they have put a lot of restrictions to the US companies doing business in China. So they're feeling the brunt over there also, and those specific companies will face the heat in US stock markets also, because their business over there will come down, which means the earnings will come down, and you'll see a downfall in the US markets companies as well. Because it's not that only China is exporting a lot of things to America. America is also exporting a lot of things to China. So there also you'll see a slowdown, which means that China and US markets will remain volatile. They'll be news driven, and people will hesitate in putting a lot of big money into these markets. So a bigger trade for this market probably is looking like over until unless you see a end to this tariff war. It is not going to end because Trump is not in a mood to stop this tariff war. China has already told that we want to take the war to the next level, or next to the we'll fight to the penultimate end, which means that the tariff war can only intensify, or it will still remain for a lot of time. People have to come on board, they have to sit across the table, they have to solve the issues, and it's not a small thing. It takes time, which means that this war will continue, and you will see some kind of a down performance from US and China markets. I'm not talking about Hong Kong, but I'm talking about China and US markets. Uh, Trump has also told that I will be putting big sanctions and tariffs on Russia if he's not stopping the war. We don't know whether it was just as a just to show to the world that he wants to be as strong as possible to Russia also to end the war. It's not that he only wants to be tough on Ukraine. Might be that is one inference we can draw out of it, but that's the that's one statement which Trump has given, and I think Russia has also shown keenness in stopping the war, which I've been telling right from the day Mr. Trump has become victorious. So that the intentions of Russia also stopping the war is pretty much there. Only thing is Russia is taking advantage now because of the situation which US is in. Europe is facing a lot of issues because US is not only trying to come out of WTO, they are not only trying to come out of the World Bank, they want to come out of WHO, World Bank, IMF, and now they have told that we want to come out of NATO as well. And that will be a bad news for European markets and European countries because Europe is one country which has never been unified. We already seen that the world wars have always started from Europe. These countries always try to fight among themselves, and US was keeping them somewhat united. It was keeping them in a tight thread. Now, if US takes away his hand, a lot of nuclear answer is not there with European countries. They will start fighting within themselves, and Russia will see this opportunity, and probably Russia will try to dominate Europe a lot. So that kind of again a geopolitical economic shift will happen. It will happen in the medium term to long term. But that is one thing we need to keep in mind, and that is how probably US is behaving now. One more challenge US has to face now is their debt ceiling. You remember every time the debt ceiling date is due, then they have to sit, their election has to happen, voting has to happen, and the debt ceiling is extended to another month, 2 months, 3 months, whatever it is. I think that is due in this month and probably next week. This time the negotiation will be tough because the kind of people that have been expelled out by Trump, they're not happy, and probably the support from Democrats will not be so easy to gain for Trump. So it will not be an easy walk this time for getting those sanctions, getting those approvals from those for extending the debt ceiling. That's another thing we need to watch out for. It will keep again the US markets slightly wobbly. They might not do our performance once again. So US markets will probably perform the similar way. The kind of things are happening in and around. One more news came from Trump that he was very happy and trying to show his victory that He's actually forced India to reduce the tariffs or not. And what he's trying to say to the world is that I was never wrong. And there were a lot of misconduct happening with US in terms of tariffs. And now I started putting the countries down. But a statement came from our foreign ministry that this it's an early stage. We are still in the discussion stage. Nothing has come out. Nothing has come out concrete. We're discussing, but everything with things have to finalize, and then we have to come out. So that's the statement India gave it, but that's how the news from Trump came. So, and I know that negotiations are going on between India and US a lot. Let's see how much our country bends to their demands, and let's see what kind of equilibrium can be made, and can we really avoid those tariffs on 2nd April, which is coming to the world. So that's another thing which happened in terms of markets. Dollar index again is continuously sliding down. That's again a good thing. Bond yields have become stable. So that's on the global front. China, the number came for CPI inflation. It is actually negative, which means they are into a great deflation. The WPI index for China has been falling for last 24 months, even more than that, which means they are into deflation. And most of the economists are saying that the 5% GDP growth target, which has been set by China in the last week, is not achievable. It is not achievable, and it is not a achievable target. So it's not a number which the world is now eyeing for, and China probably is whatever it looks from the top. It is in doldrums and will continue to be in doldrums. Tariff wall will definitely hit them. It's not that they will not be hit by them. Their consumer confidence is still down. The consumption is not going up. On top of that, they're facing issues in terms of the property market, which has lost almost $18 trillion in value, which is almost one time GDP of the entire country of China. And on top of that, you are facing a lot of issues in terms of deflation and all these things. Deflation because people are not consuming things. That's the issue. And on top of that, you are sitting with overcapacity and all those things. So China has to worry a lot. But Hong Kong looks much better. But today, Hong Kong also, it shed almost around 500 points to around 2.5% at one point of time. So Hang Seng market was also in deep red in the morning. US markets, anyways, in the afternoon hours, they started around 180 points down in terms of futures of Dow. But while our market was going last 1.5 for the Dow futures suddenly became 500 points down. And that's the reason why you saw a sudden downfall in the Indian markets. So overall, the world is now reshaping in terms of Trump. They're trying to realign, and a lot of economic activities will keep on shifting. I think UK, again, there was a statement today, I think from European Union, not UK. They want to close the FTA, free trade agreement with India, very fast. And you believe me, that will happen very fast now. Europe will try to make India a global partner for them, whether it is defense, whether it is consumables, whether it is trade. Europe will see a new partner in the form of India. US cannot avoid India as a trading partner. Whatever they say, they know that the markets of theirs require India a lot. Russia, anyways, is a friend of India. So, seeing these global scenarios once again, you will see those kind of China plus one, India emerging as a winner, with Europe becoming a friend to India, India becoming coming out as a winner. Even with US also, we are still managing to reduce our tariffs. We are trying the dialogue. So, which Trump will like, because apart from us, nobody else is doing that kind of a thing. Canada and Mexico are extremely unhappy with whatever Trump is doing. Anyways, Canada will have a new prime minister now. I think the elections are due and it should happen. So we'll see how it happens. But they are also not able to reach to a equilibrium, or let's say to a deal. Moreover, Trump itself is finding a lot of difficulties. Their automakers are finding difficulty because the auto components are manufactured in Canada, then they go to US, they get manufactured there. Auto companies are getting manufactured, then they again go to Canada for or Mexico for final finishing, then again get exported back to US. So though if you want to put the tariffs, then it will become 75% tariffs. So he actually told that okay, whatever agreement has been done in 2018, let's exclude all the products from it. So there's a lot of hodgepodge, there's a lot of confusion, there's a lot of uncertainty, there's lack of clarity completely in US. And that's the reason why markets are jittery, the markets are confused, and markets will eventually not like this uncertainty. And that's what is happening in US markets also. It's not that people are not believing that Trump will do things good for US. But the problem is that this will not. It is not coming out of a clear thing from US. It is coming in. It is coming in steps. It is coming in steps, and which is not liked by the markets a lot. Funny. So this is what US have to solve, and when this is not solved, US markets will not see any rise. Now coming to our Indian markets. So what is happening in India? Morgan Stanley today came out with one more story and one more story in the sense, one more report that Indian markets are looking extremely good. They are highly surprised with the kind of selling that the FIs have done. India has come to a stage which is where the valuations are very attractive, and the long-term story is of India is very much intact. And they've given the targets also. They've given 23,000 next 2 months, then I think 25,500 for the entire year, and so on. Citibank has already given a target of around 26,000. That is how things are moving in Citibank. Even Bank of America has given a good target of 26,000. Even Goldman Sachs, which has been pretty negative for a lot of amount of time, is also now telling that India is certainly positive and we should look at India. So India is becoming good, and that's the reason why when all the Asian markets were down today, and US futures when they opened, they were around 230, 240 points down. Still we traded in green. We tried to cross about those call levels, call right now of 22,600, but eventually the stock futures of US and Nasdaq slipped drastically in last 1.5 hours or 2 hours. They went around 500 points down, and we saw a sudden cut in Nifty, and we gave up all the gains and actually closed below 22,500. Actually, we closed below 22,500. So that's probably not a good sign, but I would slightly give a benefit to the doubt because it happened because of the big downfall in the US markets. Good thing is that we have digested those kind of falls now. We are already digested the clues of 450 to 500 points down on Dow. We are going with that kind of mindset. So if that kind of session happens in US, we're pretty prepared for it, and that should not worry our markets. So what our markets are facing a problem is again the FIA. So if you see the Friday's data, after a long time, I think after 3-4 days of session now, they did selling in stock futures. Although it was only 1,700 crore, but we saw a selling that was not good news. A lot of shorts were added and long were trimmed. That is again not a good news. And a lot of call writing has happened on 22,800 and put writing on 22,300. So for this week, the range is 22,300 to 22,800. We'll try to spend time here and there. Markets should not go down too much. I think we'll not be seeing level below 22,200 until something drastic happens. But we'll not be able to cross those levels of 22,800 also. That is looking like the data option which is being set up, although these things change very fast. Now, one more important thing is that in this series, which has started now in March, we have started with around 22,550, 22,500 kind of levels. And if you remember the first day of the series on Friday, which was the last Friday, we saw a cut of around 420 points on Nifty, which means fresh shorts were made on 550 kind of levels. So we're still hovering around that. We want those levels to be crossed, and we want to cross the major resistance of 22,800. Until unless the 22,800 is crossed, or at least we start closing above 20-day exponential moving average, the market will remain weak, and any selling, any rally could be sold off very quickly. It's not that it will happen, but there are chances that these rallies will fail very fast. So we have to be careful in terms of what levels are we trading and how much of a rally we are expecting. The range, if I tell you, is 22,300 to 22,800. That's the rally. That's the range which is looking at. I don't think that we'll be crossing below 22,300 very fast now because a lot of put writing has happened there, and we're seeing a lot of support also there, and a lot of good news has still come into the markets. But 22,800 is also difficult to breach, considering the uncertainty and considering that the overall, this tariff thing is not getting resolved. It's becoming more and complex. It is, spreading to various countries, and it is just, something happens. No, you are trying to assimilate the things. It is actually decimating, which is not a good news for the markets. So, with this kind of behavior, we will find difficult to navigate this kind of market. So, what should we do? If you're intraday trader, you would probably trade in this range. If you're a positional trader, then I think 22,000 is a good support. 22,800, 22,000, that's support, which still remains intact. It's difficult to breach those levels, but the high side also we are intact. We are tightened up on the high side also, and the low side. So range is very small. Now, for any decisive call, we need to break the ranges. So either we break around 22,800, we close above that, or at least let's say 22 expansion moving average. I think it's the same level, or we start closing below 22,300 and again 20,000, 22,000 kind of levels. Then we'll assume that there is still the weakness in the market and we are going below 22,000. So that's a range, and within this range, intraday traders can play, but positional traders have no, I what should I say? They have no, उसमें मजा नहीं है. There is no fun and there is no big cream in it. So if you are a position trader, wait for the levels to be crossed and then enter. But if you are entered at 22,000 levels already, which actually I have done, so I have taken a position 22,800. Then again, I averaged at around 22,100. So my average is around 22,400 and that kind of levels. I'm still confident because my risk is only 400. But I don't expect that the range should be broken down below 22,000. My still the best case scenario would be that we break the range on the upper levels. But that can only happen once the tariff thing gets resolved and the world order comes to sign kind of a pause. With this much information flowing here and there continuously, it is difficult to navigate. For anybody, it's difficult to navigate, and people will sit on cash. People will not try to deploy the money so fast, in spite of whatever you say, whatever people are feeling. But those kind of things, those kind of decisions will still be in abeyance. Now, one more thing is that the CPI inflation report will come for US this week. We have to closely watch how the CPI inflation numbers are looking for US, and also we'll be getting our CPI numbers for India also. I think the kind of inflation, the kind of vegetable prices we have seen in February and the higher base of last year in February, I don't think we'll see an increase of even 4% inflation this month. I think we'll be below 4%, which will open the room again for the rate cut. That is for sure now that we get one more rate cut in April. That is almost looking certain now. So probably a lot of good news have already come into our markets. The valuations have been corrected. That's the reason why market is finding now very hard to, drop down so fast. If this kind of news would have come 1 week before, that you are down 450 points on Dow, we would have fallen by 700 points on Monday on Nifty, or at least 500 points. But today we swallowed those news. We were around 90, 95 points down in terms of Nifty, which is not bad at all. So we are now showing resilience and outperformance, but other markets will remain jittery. And that's what my best case is, that India will still remain a favorite destination now because the lower sides are capped and the upside remains also restricted. But there's a chance to break those upside levels. When it will happen, we don't know. It will happen in March, difficult. It will happen in April. There are chances when you see some kind of dust settling down in terms of tariffs and all. We have to wait and watch how things happen on those fronts. VIX was pretty high today. It was around 4.5% up, which means fresh, hedges have been taken. So, which means market is nervous. Fresh hedges has been taken, and although it's less than 15, but it looks like market wanted to take a lot of hedges because of the US markets showing down. They're expecting something big today in US markets. That's what the data was saying. That's what the screen was saying. I'm not saying it will happen, but it is looking like that today something drastic will happen in US markets. That is why we saw the VIX very high because with 90 points down, and in the morning I think we were in green also. So with 90 points down, we don't expect VIX to increase by 4.5%, 5%. But that means a lot of hedges has been taken, a lot of options have been bought, and probably some kind of news, probably bigger players would have known in US, which may be due or which may not be good for the markets. That's why probably those kind of bigger hedges has been taken. Let's see how the US markets pan out. As of now, I think now Indian story looks pretty good. We don't expect now that to sell India and invest somewhere else, whether it is China, whether it's Hong Kong, whether it's US, all those trades are gone. Now it's only how much downfall we can tolerate for US. See, if US falls less, we will fall even less. If US increases slightly, we'll increase more. That is for sure. But if they fall a lot, we cannot be resilient. It's not that US markets are, going down 1%, 2% kind of every day, and we are just sleeping 0.5%. No, we will also be going down with US markets, and especially the IT industry. If US markets are going down, if the growth is looking like a concern, then India will also face the similar kind of problem and will not be able to navigate it. So we want US markets to actually not perform well, but we don't want it to go down also too much, and they should not go down. See, Powell also told that US market, US economy is looking good. Anyways, Trump has done some good things. He has cut down the budget of this government employees. He reduced government employees. He's trying to do good for. He's already done a lot of orders he have signed for removing those restrictions in terms of government people. A lot of rules and regulations he has currently quite eased out in terms of business and all. He's trying to, with the help of tariffs, he want to increase the business of US country companies. So still he's doing good, which means that we should not expect the US market should see a big downfall from here. But we don't see even the bigger rise also from here. So it's similar thing, and that's why India will be in the same way. So that is the kind of problem that India will face until unless we see some good news from Indian markets. For that, we will wait and see. So Indian market overall is looking slightly, I would say, resilient, of course, but not very strong that they can rise on their own. They want support from global factors also to rise. So fundamentals have become good. Crude, if you see, it has become extremely good. The target for crude which has come, Morgan Stanley, I think, I'm forgetting the name. I think it was Morgan Stanley or Goldman Sachs. They've given a target of $60, $50 for crude. So imagine the kind of downfall we are looking at for crude. Anyways, the inventory levels are going up in US. A lot of you know crude oil production is getting increased by OPEC, and this will all be good news for India. I already told you on Friday also that if $10 of crude when goes down in terms of WTI, our current account deficit decreases by around 14 to $15 billion. Our CPI inflation goes down by 0.4%, and our WPI inflation goes down by 1.35%. And this will probably remain now. Crude will remain subdued. If your OPEC is now increasing the production, you are seeing a lot of issues in terms of growth of China and US. Then where the crude will get consumed? Nothing. It will remain subdued. And I think the figure which was coming, I think the news which I was hearing was the long short ratio in crude is the smallest in many, many years, which means people are not long in crude anymore. So if they're not long in crude anymore, which means crude will remain subdued. And the production increase from OPEC will start increasing from April onwards, which means crude will continue to decrease. These are big tailwinds for India. Big tailwind for India. But today, one thing which actually worried me was the downfall of rupee. We went down around 35 paisa today in the trading session, which I could not digest why it is happening, because dollar index was down at around 103.6 kind of levels. Uh, I don't understand. Probably we are allowed our currency to slightly come down to counter the tariff or counter the currency movement which is happening in the China market. Probably because China is trying to devalue their currency a lot. We have to wait and see why we allowed this big downfall, because from 35, 40% down today. At one point of time, it was 40%. So currency is probably one thing I could not find the reason. I was trying to research, but I could not find a reason why this big downfall was there in rupee, which just slightly bothered me to a certain extent, that why you were seeing such kind of downfall in rupee, because again that kind of doubling of mind will happen in the minds of FIs. Now we again trading at around 87.3 kind of level on rupee. We have seen the level on the downside to around 88 kind of thing. We're pretty close to it. We want that buffer. Like we have got a buffer in terms of dollar index. We were trading at 110 at one point of time. Now we are 103.6. So we have a buffer. So even if it goes down 1.5 points, we're still okay with it. We can bear it. But rupee is still on the downward what is range. So that's slightly worrisome. That's one thing we've all found slightly worrying as far as the Indian markets are concerned in terms of parameters. Otherwise, I think it's only the FIAs now who have to call the shots. Uh, their brokerages are bullish. We don't know when their fund managers will become bullish, and when they start putting money in India. Whenever they start putting in India money, I think the markets will do a big rally. When it will happen, I don't know. Uh, Today is an important session to watch in terms of US. VIX was not giving a good feeling, and the kind of shorts again which have been formed in the system, these are also not giving a good feeling. But the kind of put writing which has happened at 22 to 300 is also giving a lot of support and some kind of relief also in terms of levels. So this is the analysis for today. This is the range. This is what is going on around the world. This is how the product parameters look like, and that is how we are poised on the market. So with this, I end my session today. Thank you for watching. Thanks so much.